Welcome to Subramani. I'm going to talk to you about the Financial Stability Report for June 2025 by RBI. It highlights a significant rise in household borrowing, particularly for consumption purposes. Now, this is something which I see, and I was very happy that RBI has highlighted this. I see a lot of people who legitimately buy everything only on EMI, whether it is making a family trip to Goa for 3 people and saying, oh, the ticket is, they are not worried that the ticket is 7,000 one way, which means that you think at the last minute and you do, that means it's about 14,000 into 3, 42,000. 42,000 is not the problem, whether 42,000 is available on an EMI. If it is available on an EMI, they don't even think they should use their credit card or anything. They go to any website which is willing to allow them to borrow that 42,000 on an EMI to be repaid at 7,000 per month over 8 months or 9 months or whatever, where they're obviously paying a significant amount in processing fee, in interest and all those costs, but they're happy to pay because this loan is available anonymously. You don't have to do anything, just click a few buttons and you're eligible for that loan, right? And which also means that women should take more interest in knowing how their husbands are using the money, how much is being funded for your expenses. Are you borrowing to spend? Maybe the wife would say, why are we going to Goa for when we are borrowing? We might as well go somewhere closer. Maybe we'll travel by public transport, something like that. If there is no feedback, the husband can then turn and say, but you also enjoyed all this, but do you know that it is coming out of borrowing? So what are the key findings? I mean, you want the full report, it is available on rbi.org.in, but yeah, per capita debt increase. I'm reading from the report, and the per capita debt of individual borrowers went from 3.9 lakhs in March 23 to 4.8 lakhs in March 2025. Please understand, the number of Indians borrowing are not at the top end, right? The people at the top end are not borrowing, or even if they're borrowing to buy some other assets, and they know what they're doing. Hopefully they're doing a leveraged investing, so they know what they're borrowing for. They're borrowing for creating assets, whereas people at the lower end are borrowing for creating spending. There's a huge big difference, and so primarily driven by higher rated borrowings taking additional loans. This is one fantastic thing for people who are investing in banks and NBFCs. Thanks to UPI, today everybody knows how much is the income of let's say a grocery shop or a hotel, which is a small hotel. Maybe it was 1,000 rupees per day is what they were earlier, but now they are realizing that UPI itself is 2,000 rupees per day, so maybe their income is higher, which means all those people who have an UPI account are suddenly eligible, and the bigger banks, the smarter banks, will soon start giving them loans. Actually, they've already started giving them loans, which means these people will come and ask for a 2 lakh loan to buy a car, or a 4 lakh rupee loan to buy a car, and those kind of things will start happening, right? Also, companies encourage people to borrow by giving a letter saying you are eligible for a car with an EMI of 44,000 rupees, right? So, which means any car which is available to you for 44,000 per month for a 3-year period is a good buy. Nobody thinks in terms of price of the Goa trip. Nobody thinks in terms of price of the car, how much interest are they paying. They just don't even know the breakup, right? So 44,000 per month they can afford, so they go to the shop and they find that the car that they like is 56,000 per month, and they don't know the car, and then the very friendly dealer says, sir, if you make an upfront payment of 4 lakhs, then we can make it 44,000. Then they finally scrape the bottom of the account or redeem some mutual fund, and voila, there is 3 lakh, 4 lakh, 5 lakh gone to the from the bank to the car company, and your favorite car is available now for 44,000, right? The debt to the household debt consumption household debt composition as of March 2025, the retail loans, which means auto loans for consumer goods, etc., accounted for 54.9% of total household debt, outpacing housing loans. Housing loans is 29%, and housing for agriculture or business is also down. These consumption-driven loans form 25.7% of disposable income for March 24. So again, it is increasing. Loan for consumption is increasing. Debt to GDP ratio. Household debt reached 41.9% of GDP by December 2024, lower than 46.6% for emerging market economies, right? Indicating relatively contained risk. However, RBI emphasizes monitoring borrower profiles and lending patterns for financial stability. Apart from this, of course, I am not very sure whether this includes the gold loans, but gold loans are also surging. As gold prices go up, people are not buying more gold. People should understand this. 1 lakh is a big barrier for gold price. So when it reaches 1 lakh, people say, let me not buy, let me hold back, let me buy maybe 18 carat, maybe buy less than 24 carat, whatever they need for jewelry. Also, you have this 1% covering jewelry. Maybe that is more attractive, but people are borrowing against gold. I don't know whether these figures include that. Tightening lending rules post-COVID, the RBI tightened regulations on unsecured lending, which previously fueled consumer spending. This has impacted the emerging consumer group, which is about 300 million, contributing to a consumption slowdown. See, consumption slowdown is what caused the RBI to reduce interest rates, right? So now government wants to kickstart the consumption. If you have given PLI, it made sense for you to remove ATC, ATD, and all those things and encourage people to spend more. That's exactly what they are doing. So now there will be more pressure from your banks to asking you to borrow more and spend more. The economic context is declining financial savings and approaching, which is very close to a 50-year low, and stagnant incomes for the middle 50% of taxpayers, relatively halved in terms of inflation adjusted. Real wage jump has not happened, and which means there's forced reliance on borrowing. Or the other way to look at it is, I have decided this is my standard of living for which I need this income. If this income is not available, I'll go and borrow, but I will not reduce my standard of living. I am not passing value judgment. I am saying this is what is happening. Now, the critical perspective is RBI's focus on macro stability may underplay the micro level distress, and there is always this fear that the individuals who are borrowing may not be able to repay. Well, double incomes are there, and there is just one kid, so that kid can throw a tantrum and get a flight to Goa. Right, so those things are happening, and parents also want to go, so then they use it as an excuse. Heavy consumption borrowing coupled with automation driven job losses and a shrinking middle class signals structural economic challenges, which is true if you're 44 years of age and you lose your job in a tech job, a supervising tech job. They called you vice president, but you were just supervising, you're gone. New technology, AI, something will replace you. At that stage, how are you going to repay your loans, your car loans, your home loans, your consumption loans and all that? Think about all that before borrowing. Of course, if you want further details, it's there on rbi.org.in, and I may do a session, I may do a video on whether you should borrow for consumption. That's my view. It doesn't matter, because 55% of Indian loans are for consumption. So there is a young generation out there which is borrowing money and does not even bother about repaying on time, because every day they have to play a Dream 11 for which they have to put 490 rupees, or I think it's multiples of 49. So that is the kind of amount that they are betting. So after 4 or 5 strikes of 490 bucks, you have still lost only 3,000, 4,000 rupees. Maybe 10 times you play, you've lost 5,000 rupees, which is not considered to be very significant. But this is the same person who has borrowed money to go to Goa with his family, and he's paying an EMI on that 42,000 also. But this 5,000 which he's putting on Dream 11 or whatever other games are available, that doesn't look expensive. So right, so there is innumeracy which is a problem, and I want more and more women to please come and participate and tell me what other topics you want to cover, because if you don't pay attention, your husband will turn and either if your husband drops dead, you will be stunned to see how much of debt your house was living on. And I have seen this happen. I saw a 52-year-old businessman dying, and suddenly we realized that the family was living far beyond its means. It's a fact of life. So these things happen and you realize it much later. So women, please participate. Please know from where your husband is spending, and if he is borrowing, say no to that expense. That expense need not happen. If you can't afford it, don't do it. Thank you.